One of the main problems that people have in Bitcoin is they expect way too much too soon. Charlie Munger says the big money is made in the waiting, not the buying and the selling. Do your research. Because you cannot borrow somebody's conviction. You have to develop your own. And you only develop your own through doing the research. And the problem is without having your own research and your own conviction, you won't allocate properly in the greatest opportunity that we've seen in over 500 years. Not just your lifetime, multiple lifetimes.
All right. So today I have the pleasure of being joined by Mark Moss on the show. Mark, thanks so much for taking the time to be with us today.
Yeah, great. My pleasure.
Awesome. So, as the title of the show implies, Bitcoin journeys, what I'm always interested to talk about with people is their Bitcoin journey, but also a bit, before their Bitcoin journey, maybe, because I think a lot of it, obviously, the background feeds into how we approach Bitcoin. And when I was doing research for this podcast specifically and reading a bit about your background, you're, of course, a serial entrepreneur with lots of experience and many businesses that you have started and are building at the time. But I think one thing that stood out to me when doing research was kind of the 2008 financial crisis and the impact that had not only on you financially, but also personally. So I'd love, if you could kind of start there and give a bit of context to that part in your life and kind of how that shaped you.
Yeah, it had a really big part in my life and pretty much is responsible for where I'm at right now today, I'd say. So leading up into that point, I was sort of born at a time or kind of came into my professional career at a time where we were coming out of a major crash. So I had seen this massive bull market and I had started several companies, had two big exits. I sold a high-tech medical company to the largest Fortune 500 medical company in the world. And I was building a bunch of real estate, crushed it in real estate, hundreds of properties, fixing and flipping and rentals and development, all those things. And then, after selling all that, selling the businesses, having a big exit, sort of hitting all my retirement goals early, 2008 happened. And, in Southern California, probably California, Arizona, Nevada, Florida, probably the worst parts in the entire nation. And here in Southern California, real estate dropped 60% in 12 months, like unlike anything that had ever been seen before. Anyone that watches my content knows that I'm a big student of history. I love to bring historical parallels because I believe that history sort of gives us this framework to kind of tell what the future holds. And so I studied history and I realized that the worst drop in real estate in California was 6% in 1 year. It was 30% over 4 years. So, I took that into the future and I said, well, the worst drop is 6% in a year. What if it doubled that, 12%? What if it was 3 times worse than we've ever seen, 18%? Yeah, I can handle that. It was 60. And, what happened is, my story, we can get into that if you want, but I basically was, had multiple 8 figures of a real estate portfolio. I had sold my businesses, so I didn't have any businesses or income. I just had the real estate portfolio. I thought I was very safe with, probably a 60% loan to value LTV ratio on that. Again, the worst, tripling the worst in history, I was perfectly fine. But at 60% drop in 12 months, I wasn't prepared for that. And without the businesses, without the income, there was just really no way to sustain that. And I got smashed. We can just say that, right? We can get into that more if you want. But what happened is it made me question what just happened. And I'll just say quickly that I think most people going through life are on a pre-programmed track.
Yeah.
They don't even realize what they're doing, and nobody even understands where they're going. They don't know where they want to go. And more importantly, the majority of people have no idea that they even have a problem or what problem they're trying to solve.
Mm-hmm.
That's like most people. Now, the majority of people, you can see it all over YouTube, they love personal development. They love watching YouTube videos. They love education. They're reading the books. They're watching the videos on how to build a personal brand or how to do Facebook advertising or how to invest, all these things. But nobody ever does anything with it. And they get the high, the dopamine rush of that shot of hope that, hey, I could change my life. But they never do because they're not actively trying to solve a problem. Well, going back to me in 2008, I had a problem. I just created tens and tens of millions of dollars of wealth. I'm retired. I got married. I had my first kid. And all of a sudden, out of nowhere, the great financial crash comes and wipes me out. I got a massive problem. I don't even know where I got to move. And I don't even know how I'm going to pay for my bills. And I got a problem.
Yeah.
So I'm going to go solve that problem. I told my wife, I vowed to myself, like, this will never happen again. I'm going to go figure this out. So I did. I realized, man, I'm pretty good with business. I've crushed it. Started multiple businesses. I made a ton of money. But what is this global financial system that I'm not paying attention to that has all this power over my life? Why am I not understanding that, which seems to be the biggest determinant of what my success or failure is? And so I set out on my journey. And that's, of course, where I said led me to here. And so I got to go figure this out. What happened? What went wrong? What caused the 2008 financial crash to happen? Over-leveraged debt. What is debt? What is this debt-based monetary system that we're in? What is fiat currency? Oh my gosh, that's the problem. Okay, now I've identified the problem. A debt-based monetary system, the booms and busts that it creates, the leverage that builds up in this system. Okay, so now I can understand the problem. What's the solution? Well, obviously, the solution is not a fiat currency. The solution is a sound monetary policy. I became a gold bug. We're in like 2008, 2009, right? Obviously, this is pre-Bitcoin. I became a gold bug. That's it. It's gold. Gold is the answer. I'm watching Mike Maloney and Peter Schiff back in the day, right? And all of a sudden, it's like, okay, now I understand the problem. Now I see the solution. And you only see the solution if you understand the problem, which again, most people come into Bitcoin. I see it all the time. As a matter of fact, on X, just like a week ago, someone left a comment and they said, I still don't understand. I've done all the research. I still don't understand what the use of Bitcoin is or what problem it solves. And I just replied, I try not to be argumentative online. And I just said, it's probably because you don't understand money. So start there. And I wasn't trying to be mean. I'm just like, start there, right? That's where I started. And so you have to understand the problem. So I understood the problem. I understand the solution was gold. I became a gold bug. And all of a sudden I'm like, okay, we need to go back to gold. We need to sound money. And that led me to Bitcoin. I can kind of stop there if you want to dig more into the 2008 situation.
Yeah. I think definitely that's an interesting thread to pull on, because I think, we'll of course get into the Bitcoin stuff later on in the show. But what's interesting to me is because, as you're describing that early part of your career, having all these successful ventures, basically, like you said, being retired, right? Assuming that, okay, you've put all the time and energy into building this business. It's gone successful. Now you can set yourself up for the future. And then essentially being completely rugged by a system that, you have no influence over, essentially. And my question is, like, because you're already an entrepreneur, you're already kind of going against the thread. As you mentioned, there's a lot of people who kind of just are programmed, go with the system, this and that. But then there's this financial piece that's kind of a big part of our lives. And a lot of people also don't really understand how that works or really do much research into that. When you were building these businesses, and before the financial crisis in 2008, did you have any inkling that something big like this was about to happen, or was it completely for you that kind of like it just blindsided you?
Yeah. No, I did, right? I mean, obviously to the extent that it happened, it blindsided me, as I've already said, right? So as a student of history, I saw that, obviously I understood booms and busts happens. As I said, I sort of looked at specifically in real estate, which is what I had kind of moved into, what had happened in the past in real estate. And again, right, I've measured this. I multiplied the worst case scenario as I thought, but I was blindsided by the extent of that. But I would say that, because I'm a student of history, and I always have been, it was my favorite subject in school. I had been reading books, and there was one book specifically by Harry Dent Jr., who does amazing research He's wrong. He's continued to be wrong. Every year he's been calling for a 90% market crash. For the last 12 years, it hasn't happened. But his research is right. His assumption of the research is wrong. However, he wrote a book, and I think I read it in 2006, and I believe it was called The Great Bubble Boom Ahead.
Mm-hmm.
And it was basically forecasting exactly what happened. And when I read that book, maybe it was 2006, 2007, all of a sudden I was like, oh, whoa, like this is bad. Like he's explaining the leverage in the system. He does most of his research based off of demographics. The way demographics work is that most of us, for most people anywhere in the world, even though we're different people, our spending patterns are usually somewhat predictable through different phases of our life, right? So up until 18, most of us are in primary school. Up to 21, 22, most of us in secondary school. 22 to 28, we're maybe getting married, starting our careers. In our 30s into our 40s, we're at our peak spending years. In our 60s and 70s, we're into retirement. So around the world, these spending patterns are predictable. And so then you can take those and extrapolate the demographics of any society over the spending patterns, and you can start to see patterns. So anyway, that's how he does his work. It's very compelling. And I said, oh, we have a problem. And so I started positioning for it. I started to liquidate as much stuff as I could, as a matter of fact. And we sold a ton of assets that we could. However, I was doing real estate development. So like I said, I started with fixing and flipping properties, and I'm developing. And, one thing that helps me in the Bitcoin space is that one of the main problems that people have in Bitcoin is they expect way too much too soon. Charlie Munger says the big money is made in the waiting, not the buying and the selling. And for me, building real estate projects were typically about a 5-year project. From the time I identified a piece of land to go through the process of buying it, hiring the architects, breaking ground, developing, it's about a 5-year project. So my brain thinks in 5 years and 10-year cycles. And so for me, people ask me, and maybe we'll get to later, like, where do I think Bitcoin ends up? I think about we're in 2030. I think about in 5 years from now. Anyway, So I started liquidating what I could, but you can't just unwind a 5-year project. So I was in mid-cycle in a bunch of these properties. And so it wasn't completely caught off guard. I saw the warning signs. I started to pivot and move as best as I could. I thought I had mitigated my risk by building up my war chest of money, getting prepared for triple the worst that had happened in history, fortify the gates, so to speak. But then to the question that you asked specifically, yes, I was caught off guard by not only the severity of the drawdown, but the speed of it as well.
Yeah. No, and I mean, I think it was most people, right? Like, I think, as you mentioned, you're a student of history, and you did the best in the means possible, especially with an asset like real estate, where you mentioned there are long development cycles. So I think it's not just you, but so many people during that time were affected by this great financial crisis. And it is kind of this boom and bust cycle, right? We see this happen over and over again. But I think the thing today that still is pretty prevalent amongst a lot of people is, like you mentioned, understanding the problem. I think a lot of people fundamentally don't understand the underlying problem. And I think it's important also, and part of the aim of this podcast is to also educate people on what is the problem, because I think, in order to understand the solution that is Bitcoin, you have to understand the problem. And so, given your wealth of experience and knowledge, when someone who doesn't come from maybe a financial background or an entrepreneurial background like yourself, how do you explain the underlying problem in a way that's, let's say, easy to digest for someone?
Well, I think we need to expand on that question just a little bit. So everyone needs to be thinking through everything in that light, because that's how our brain works. I'm hungry. I have a problem. I need to solve that problem, my hunger problem. What should I eat? What other problems am I having? Well, I'm trying to get in shape for a fitness competition I'm going to be in 45 days. So I need to cut down my body fat and build muscle for the next 45 days. That's problem number one. Problem number two is I'm hungry. And so I can triangulate the problems I'm trying to solve, and that tells me what I should eat today.
Yeah.
So the first problem is I don't have enough money. I feel like my retirement is behind. I feel like no matter how much I'm saving, it's not going to get me there. But we're all in solving different problems. So are you 78 years old and you didn't save enough for your retirement and you need to get that going right now? Are you 24 and you're making $1 million a month and you're afraid you don't know where to put it? So first of all, what is the problem I'm trying to solve? All right, number one. Then we can start getting into like more of these intricacies. But I'd say overall, since we're talking about Bitcoin here and most of your audience is already Bitcoiners, we'll frame it up in a sense where the problem that I discovered after 2008 is that the fiat monetary system, a debt-based monetary system, was the problem.
Yeah.
The problem that caused my demise. And that's the problem that we're all facing, whether we realize that or not. Right. And most people know this. Like, this is not groundbreaking for anybody. The majority of people today realize that they should not be saving their wealth in fiat currencies. Like, everyone already kind of knows this. It was like the number one issue probably going into the last Trump administration, presidential race. Everybody knows inflation is a problem. This is not groundbreaking news. What is a little bit groundbreaking is what inflation really is and how severe it really is. And that is a little bit different. Most people don't understand this. So the majority of people understand that inflation's a problem. But what they think is that prices are going up faster than the rate of their pay. And so their quality of their life diminishes because of that. That's the problem. Most people are already sort of aware of that. The majority of people, there was that meme of Michael Saylor on an interview, and he said, people that save their wealth in money, we have a word for them. We call them poor. So like most people know this, right? And so the majority of people are, at least if they can, trying to save somewhere and thinking about they should be investing in it. But for the majority of people, like 97% of people, they're investing passively. So a little bit of my money from my paycheck goes into some account that my employer or whatever set up for me, goes into some pension fund, 401k, IRA, something like that. And some plan administrators doing something with it, put it into an S&P 500 index or a 60-40 bond portfolio. And I'm investing, right? And that is going to save me from inflation.
Yeah.
But that's the wrong problem. I mean, they understand the problem, that their dollars are not going to buy them as much or more goods and services in the future, but they misunderstand the problem. And so what do I mean by that? The government tells us, each government around the world tells us what inflation is. CPI, consumer price inflation, or CPIs. What they do is they take a basket of goods and they project that through time and they track how the prices of these basket of goods have changed. But that's not what inflation is. The word inflation was used differently up until about the 1950s. Ludwig von Mises, the godfather of maybe the Austrian School of Economics, sort of warned the people. He said, hey, look, they're going to try to change the definition of this. We can't let them. The reason why they want to change the definition of inflation is so that we don't understand it anymore. If you think about the word inflation, if you think about if I have a balloon and I want to inflate a balloon with air, I'm increasing the volume of oxygen or the volume of air inside that balloon, right? And so inflation was when we increased the volume of money in circulation. That's why the saying is that inflation is always and everywhere a monetary phenomenon. It's when we increase the volume of money. Now, prices moving up and down is a result of that happening. And once you and the reason why they change that definition is so they can say we don't know what causes inflation. I mean, it's certainly not money supply, because look, all these prices of like electronics went down, but prices of milk and meat went up. We don't know. It's supply chains. It's not money printing. It is money printing. And so the real inflation and the rate of inflation we should be watching for is not the CPI. It is the rate of monetary expansion.
Yeah.
Now, right now, we can see, if you go back however far you want to look, you can see that the rate continues to go higher and higher and higher. For the last about 5 years, the rate of monetary expansion globally is about 10% per year. That's the rate of inflation. So what that means is that my money is losing about 10% of its value, its purchasing power, its energy per year. That means in 5 years, you've lost half of it. And so the problem that most people think they're solving is I'm going to go through my investment fund, my mutual fund, my IRA, 401k, whatever, and they're going to do some 60-40 bond portfolio split, and I'm going to average a 7-8% return. which is good because inflation's 3%. So I'm beating inflation plus a couple points. But the real problem is that the number's 10%.
Mm-hmm.
And so if you look at the S&P 500 or you look at the median U.S. home price, they're basically perfect proxies for inflation. They move up almost at the rate of inflation, which is why when you look at your retirement account statement, you got rich. You saved up. You got hundreds of thousands of dollars or millions of dollars. But I don't feel more rich. Why does it look like on paper I have more money, but I don't feel it? As a matter of fact, I feel more poor than I used to be. I can't afford the same quality of life. I can't take as many vacations or trips or go out to eat as much. I can't get the new car. And that's why. That is the big problem that most people aren't aware of.
Yep. No, fully agreed, and very, clear explanation there. I think so we've highlighted the problem. I think you mentioned earlier that sound money is the solution to this problem. First, you discovered gold after the great financial crisis in 2008. But why is sound money a solution to this problem? And because you're well versed on history. Maybe also I think what's cool to talk about too is a bit the historical aspect on it, and discussing maybe why in periods where the currency or before fiat currency, when things were tethered to a hard money, things were different. So can you explain a bit why hard money, sound money is a solution to this fiat debt-based system?
Yeah, so we first have to understand that we don't want money. Which sounds crazy because most of us spend most of our life trying to get money, but we don't want money. What we want is the goods and services that money buys us. That's wealth.
Yeah.
Buildings and houses and cars and clothes and food, that's wealth, not money. The money is a medium of exchange. It's a way for us to get the things that we want, to get the wealth. So that's the first thing, if you understand that. So then what we have is all the wealth of the world, which is always expanding. We're always creating new things, inventing new things, right? The wealth continues to grow and expand. You have all the wealth of the world divided by all the money of the world. So that's number one. Money can't just be printed for free. It can't just be created out of thin air. There must be some form of scarcity around that. If I have to work to earn money, but someone else can print it for free, it's going to lead to slavery every time. So money has to be scarce. And so the problem with fiat money or debt-based monetary system is that they just print it unlimited. And what happens is my $1 equals a percentage or share of the wealth of the world. Like if I bought 1% of Microsoft or Tesla. But every time or let's use strategy as an example. Yeah. But every time Michael Saylor hits the ATM and sells more shares, I get diluted. So now my $1 doesn't equal the same amount of wealth in the world. I have less, which is why it takes more of those dollars to buy more things. So if we go to a monetary system that's more scarce, I can maintain my share of the wealth of the world better. So over millennia, over thousands and thousands of years, there's been different things used for money. Whether it was a barter system where I trade you a bushel of wheat for a cow, I trade you my labor for some chickens. We had obviously coinage, right? We've had feathers, rocks, seashells. Coinage happened, and gold emerged as the best form of money because it has the best money attributes. Money attributes are portable, divisible, durable, recognizable, saleable. And so gold had the best attributes for that, and scarce. Now, gold isn't totally scarce. We still dig it up out of the ground every single day. It has about a 1.5% inflation rate, meaning stock to flow. The existing stock of gold in the world, the new rate of gold coming out of the ground, the flow, it's about 1.5% inflation per year. Now, that worked really well because now we had something, a commodity that met the attributes of money. It was fungible. Anyone anywhere in the world could dig up gold. No matter where you got the gold in the world, it was fungible. Gold's gold. But in that period, it wasn't always perfect because anytime you rapidly increase the monetary supply without a corresponding increase in wealth, you have inflation.
Yeah.
So even on a hard money system, we had the problems. Oh, we discovered this new gold well, right? As a matter of fact, in the 1500s, in Spain, they sent off the ships over to Central America and discovered vast resources of silver. And they brought all the silver back and they created massive inflation because they rapidly increased the monetary supply without expanding the production, the efficiency. Right. So even on a gold or a hard money system, you still have the same problem. You can't rapidly increase the monetary supply without increasing the production at the same time. Okay, but that's the best system that we have until now. Because now Bitcoin gives us a fixed monetary supply, so there will never be more than 21 million. Unlike gold that still has a 1.5% inflation, Bitcoin will have a 0% inflation. But also, as of right now, we're still mining Bitcoin, right? We're still bringing Bitcoin into existence, if you will.
Yeah.
With gold, again, we could just discover a bunch in South America like we did in the past. Or let's say today that the price of gold went to 10,000 an ounce. If the price of gold went to 10,000 an ounce, more people would go mine for gold. And if more people mine for gold, more gold would come out of the ground. We'd increase the inflation rate again. But with Bitcoin, even if Bitcoin went to whatever, $5 million today, more people would go mine Bitcoin, but it wouldn't bring any more back out of the ground. So it fixes that inflation problem that we've had in the past.
Yeah. No, and that's a great explanation. And I think, going back a bit to your journey specifically, so you come out of the great financial crisis, you go into gold as sound money because Bitcoin didn't exist at the time, or it was just starting. When you first discovered Bitcoin, well, I'm curious, how did you first discover Bitcoin, and what was your initial reaction upon when you discovered Bitcoin?
Yeah, so I think probably like most people's, there was the time you first heard about it, and then there was the time you first bought it, right? So there's like two, most of us have that because that's how the natural process works. I have to become aware of it before I take action on it. Most people know they should probably work out and exercise, but they don't, right? So awareness and action are two different things. So early in my career, I mean, yes, I had invested in real estate, but I had built up multiple tech companies and sold them off. So I'm like a tech guy. I built up a .com business in 1999 before the .com boom. I built up an e-commerce business in 2001, right after the .com crash. I had the high-tech medical company. So I was in the tech space, always looking at that. And so it was around, I think 2012, 2013, when I first sort of looked at Bitcoin. My business partner at the time was like, hey, check this thing out. We should probably buy some. Look at it going up so fast. And that was when it kind of first popped onto my radar. I remember looking at it and like watching it for a little bit and like, man, this is going up like a rocket ship. And I think it got up to like $1,000 and then it crashed spectacularly. I was like, whew, glad I didn't buy any of that. I didn't really understand what it was. It was just something that was like going up in value, NGU number go up, and it kind of attracted me for a minute. And then it crashed and I was like, glad I sidestepped that. But what brought me around was, as I said, right, so I got woken up by the great financial crash, and I was out to solve that problem. And again, digging in deeper into the problem and trying to make sure that it never happened to me again. I had, maybe you call it PTSD, on the banking system. And what I realized is that the banking system was not fixed. As a matter of fact, the problems are even worse today than they were back then. And there's probably going to be another collapse now. And most of the world, I think, is still dealing with that PTSD. They're still waiting for the crash. Harry Dent's still calling for it every year. And I think I was concerned with that. I was reading this newsletter at the time called Sovereign Man. And the Sovereign Man newsletter, written by this guy, Simon Black, really was really influential on my worldview. And he talked about how you would never put all your money in one stock. So why do you have your whole life in one country? Why not diversify your life? And it's what we call flag theory today. So why not have bank accounts in Hong Kong and Singapore and Panama? And why not have passports in Italy and the Cayman Islands and the US, right, et cetera? And so that made a lot of sense to me. And I realized like money's digital anyway. Like I'm just going to do wire transfers and debit credit cards anyway. Like why does it matter if my money's in Panama or Hong Kong?
Yeah.
So in 2015, I was in the process of working with somebody in his network, an attorney in Panama, to set up a trust and to get a bank account set up in Panama. And then I could work on like a residency program. And all of a sudden, Bitcoin came across my lap again. And back to the problem I'm trying to solve. I thought, what am I trying to solve here? The problem I'm trying to solve at that point was trying to get money out of the U.S. banking system because I was afraid it was going to collapse again. Well, Bitcoin's a way to get money out of the banking system. Oh, why don't I just buy Bitcoin? And so I did. It was around $300 at the time. And so I started buying Bitcoin. Now, as most people probably are aware, listening to this podcast, once you buy a little bit of it, you start thinking about it more. You start paying attention to it more. You start researching it more. And all of a sudden it's like, well, what is this thing? And what's it really about? And you start kind of digging in. And very quickly, I realized this is a tool that we can change the world with. This is a way that we can win. This changes everything. And after I realized that, and I realized the gravity of what was at stake, I just thought, I got to go tell everybody I know about this. And we can basically fast forward that today, and I haven't shut up since.
Yeah. When you first discovered Bitcoin, so I think as you mentioned, most people go through this. I have a very similar story. You kind of come into it, number go up. Oh, this is interesting. I'm going to buy a bit of it. But obviously, I think once you have some personal interest in it and you start to own it, you also want to know what you're owning. For me specifically, I'm curious, what about Bitcoin? Because once you start learning about it, there's a lot of different, I think, value propositions that can pop to your mind in terms of, okay, why can this potentially change the future? You mentioned, it's a way to get the money out of the U.S. banking system, to have more sovereignty over your money. But was that the main value proposition for you at the time? Or was there something else specifically about Bitcoin that stood out as like, wow, this is, completely game changing?
Yeah. So you mentioned most people come to it with NGU, and I would say that's correct. Most people come to it because they think they can make a lot of money with it. That wasn't what attracted it to me, right? So again, what was the problem I was trying to solve? At the point, I was literally working with an attorney to get money out of the banking system, and I realized there was a way to get money out of the banking system. I didn't have to go to Panama and spend a bunch of money with an attorney. It seemed like a better solution for me, right? I'll just take the money I was going to put into the attorney. I'll put that into Bitcoin, right? And that was the problem I was trying to solve. What were the solutions that I saw, the features of Bitcoin that I saw that really started to open my mind? It was because I understood the problem of an unlimited, ever-increasing monetary supply, and that being the problem. Gold being the solution to that, but being a tech person, understanding the technical limitations of gold. You can't transfer it over the internet. Bitcoin became the obvious solution to me. So the additional features that stood out to me immediately was, again, we could change the system because now we can have a sound monetary system. We can have a hard money today, but in today's internet technical age, because gold won't work. And so, I've listened to the gold bugs for years. I listened to the libertarians for years and all their ideologies around this, and the gold bugs with their relics of going back to a gold system. But the gold system failed. It won't work again. And so that's why, even though I saw that as a solution, it didn't appeal to me. I wasn't trying to tell everyone to go buy gold. But when I saw Bitcoin, it was like, oh, no, this will work. Now we have that. So, its ability to be censorship resistant, right? To be immutable, to be borderless, to be permissionless, right? That's a really big one, that anybody could use it without permission. So it was all of those attributes, all the moneyness attributes of gold, and then all the additional attributes that Bitcoin had. I mean, those were the things that, like I said, really stood out to me, that made me go, this is how we change the world. This is it.
Yeah. And you mentioned when you got into Bitcoin, it was about, $300 about, obviously one of the earlier adopters. The thing is, Bitcoin, of course, was a lot different then than it is now, right? Now we have a lot more credibility, not just amongst people, but financial institutions are getting it. Presidents are talking about it or integrating it into their country. So it's a completely different ballgame now than it was when you entered. So I'm curious, what was your perspective like when you did enter the space? Because it was a lot less developed. There were not as many people in it. It was a completely obscure, internet money at the time. Were you always confident that it was going to, go the way that it has, or were there also doubts in your mind about, its potential?
Yeah, of course not. Of course, I wasn't confident of where it was going to go. What most people think, because they don't really think, nor do they really have experience with investing. And most amateur investors, retail investors, they think about how much money they could make. Now, most of them think that they missed Bitcoin because they don't even think to the level of, oh, wait, I'm supposed to think about its future value, not its past. But then they just think about how much money they can make. They YOLO in, right? They're chasing meme coin stocks, whatever. Professional investors think about the risk.
Yeah.
Everyone's heard of a hedge fund, but have they thought through what that means? The word hedge means every single position they take, they're hedging to the downside. Remember the meme stock mania of GameStop, and all the Reddit boards were lighting up and they thought they were going to take Wall Street down? Really? Because every position they take is hedged. They have a predefined loss, right?
Yeah.
They didn't take Wall Street down, obviously. And so professional investors think about the downside. So what we do is we think about hedging our positions, or we think about a risk-adjusted return. That's what a Sharpe ratio is. So a Sharpe ratio measures the risk, the downside volatility, with the upside potential. So the risk and the reward at the same time. So while a lot of people go, oh man, I wish I could have bought Bitcoin at $300. Yeah, but it was so risky back then. Putting a couple $100 in or a couple $1,000 was like a huge risk.
Yeah.
Whereas today in Bitcoin, you could move millions or hundreds of millions of dollars into Bitcoin, right? You couldn't do that back then. So I've often said, I think even today is a better risk-adjusted entry into Bitcoin than it was at $300. A risk-adjusted entry, meaning I can put more money in today and I'll get a greater return, not in a percentage terms, but on my money, because I've been able to put more in because it's safer than it was back then. So, you might listen to a Max Kaiser, and shout out to Max. He's the OG for sure. He's had confidence before anybody. And you can see some videos surface from time to time of people in the space back then who also seem to have the confidence. I was just more curious. I was like, hey, I think this is a tool that we can win. Obviously, I'm going to buy it. Obviously, I'm going to go tell everybody about it. But I didn't have the confidence. And as a matter of fact, I fell down the crypto rabbit hole. Being a tech guy, I kind of fell into it's not Bitcoin, it's blockchain space. I started writing a cryptocurrency research newsletter, and every month I'd publish like 25 pages of research on a decentralized exchange or a privacy token or whatever, because I didn't see that Bitcoin was the clear-cut winner yet at that point. I wasn't really 100% sure what was going on. And I thought, that we don't know who the winner is and which level, layer one token will win. And what about privacy coins? We're probably going to need those things and all these different things. I was in my learning process. And so, there was a lot of competition. I bought a lot of different altcoins and tokens back in that period. And by about 2019, after publishing probably 1,000 pages of research on, every single token that had come out during that period, by 2019, I realized, no, it's all smoke and mirrors. It's all vaporware. And I've been Bitcoin only since. But that was sort of the progression through that to get to that level.
Yeah, and it's a very important point you make, because I think a lot of people who also enter the space, maybe a bit less now, because I think Bitcoin is really establishing itself kind of as the clear-cut winner. It's becoming more and more obvious. But I do still think that there's a lot of people who kind of fall into that trap. And I think it's also sometimes to be expected, because when you don't have the background knowledge about what the actual technology is, and even like yourself, you're writing thousands of pages of research, and through your learning journey, you've built this experience and knowledge on the difference even between Bitcoin and these other cryptocurrencies. So when you have people who are entering the space, I'm sure you get questions a lot, right? Of, yeah, Mark, Bitcoin's great, but have you seen Solana? And there's so much more potential there, because Bitcoin's already at 110K, and XRP or whatever is at whatever the price is. I don't even know, to be honest. So how do you combat those questions now, and how do you typically answer that and differentiate between crypto and Bitcoin?
I've been talking about Bitcoin for a long time. I speak at all the big conferences. I've talked to thousands and thousands and thousands of people at, I don't know, 100 conferences, whatever, over the last 6-7 years. And many, 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 many times I've stood outside after talking and just answered every single one of those questions that you have. I'm sort of at the other end of that in my career at this point, where I'm just sort of like, basically one of the last messages Satoshi left, which was, if you don't understand or don't get it, I'm sorry, I just don't have time for that, right? And so I think there's a necessary part. What a lot of times, it depends on how much energy I have to answer the question. A lot of times what I say is, look, the answers are out there for you, and you should just go find them. Because it's not something I get asked often, like, hey, explain Bitcoin to me like I'm 5 years old, or explain Bitcoin to me like I'm like in 5 minutes. And it's like, no, like you just can't, right? And it's like, 10 hours and then 100 hours and then 1,000 hours. And the more you spend, the more you continue to uncover and see it through a different light. Even in my own journey a decade later, I mean, I've been deploying venture capital in the space and for 5 years on the front lines, and I'm still starting to see it and understand it differently, right? So what I would say to those people is that there's a difference.
Mm-hmm.
There's a big difference, and I'll point to a couple just to kind of push people into the direction where they should go figure this out. Number one, I try to tell this to the teenage boys that are my daughter's friends. I think if schools could just teach this one concept, everybody would be better off. You get paid for the value you provide. If you want to get paid more money, you provide more value.
Yeah.
What is providing value? Providing value is solving problems. If I work at McDonald's and I take your order, I've solved your problem. I helped you place an order, but it wasn't a lot of value. You'd probably rather just put it onto an iPad. I helped one person, right? If I do brain surgery and I save your life, I've provided way more value. Now I can make thousands or tens of thousands of dollars for that, but that's still just one person. What if I create a miracle cure for brain cancer and everybody could benefit from it? Now, way bigger problem to way more people. Mm-hmm. So number one, understand that concept, right? So we have to understand that solutions are supposed to come to problems. So we have a problem. I've already framed it up. Unlimited money supply, censorship of transactions, permissioned financial systems, right? These are big problems. The world cannot continue without solving these. Mm-hmm. Now, gold worked. So from the Dark Ages to the Renaissance age, from the 1500s, for the next 400 years, we saw the greatest flourishment the world had ever seen. As the world globalized, global trade started happening, and we had a single currency, the florin. It was the longest lasting gold coin in history, 400 years, that went without debasement. So when we had a coin that everyone could trade globally with that wasn't debased, we saw the greatest flourishment in the world. But after the United States government, basically the NATO, seized Russia's bank accounts, one of 3 superpowers with nuclear weapons got their bank account seized. The whole world realized that this fiat system is not safe. It can't work for us. If Russia got their account seized, what hope do we have? So you see, like the BRICS, they want to start their own currency, but they can't agree between themselves. And what about China? But they don't want to open their capital markets. And we have all these problems. But what about the dollar? We're trying to devalue it. And the world can't go on unless we have a platform, an even platform for global trade to happen. That's a problem. We need to solve that. So if you understand the problems, that's where we started with, then you can understand the solutions. Well, Bitcoin can solve that. It is a completely neutral, decentralized protocol that nobody can control. It's not Solana. It's not Ethereum. It's not XRP. It's none of those. So that is the biggest problem in the world, and Bitcoin can solve that, and that's going to create a lot of value. What problem is Solana or XRP solving? I don't know. Nobody knows. Well, XRP says that they're going to be a way for banks to transfer money around, like a new SWIFT system. Okay. Do you regularly invest into bank software? Because I don't. How much is bank software worth? What's the total addressable market of bank software? How much are they? How much value do they create? Right? Like, and why can't they just use Bitcoin again? Right? And so I think if you understand the problem, and then you can understand a solution to the problem, and then it starts to get a little bit technical. But why is Bitcoin different than XRP or Solana, right? And then you have to start to understand the decentralization and the size of the nodes and why, in order to be decentralized, the node has to stay small enough that anybody in the world could run a node. And then you have to kind of get more into the technical side of things. But what about consensus? And what about voting? And you have to go down all those rabbit holes to understand that Bitcoin is code. So Bitcoin is rules with no rulers. Mm-hmm. Other platforms have rulers that change the rules all the time, right? Like Ethereum has changed their monetary supply, I think 3 times in like the last couple of years, right? Mm-hmm. And so then you have to start to go, number one, what's the problem? What's the solution? Okay, I understand that. Okay, that's the biggest problem in the world. If we solve that, there's massive value there. What are these solving? I don't really know. Are they big problems? Not really. How much value will accrue to that? Not very much. That's kind of the way I'd look through it.
Yeah. That's a really clear and simplified version of outlining it. I really appreciate that. And I think, but as you mentioned, I think the answers are out there. I think, like you said, it's a very difficult concept to really fully grasp. And I think only through self-study, through hours of hours and hours and hours of reading, of learning, of listening to your show, reading books about Bitcoin, but also about monetary history. I think that's when people will start to fully grasp the idea. But that, I think, was a really good synopsis of it. One thing that I also want to, quickly go back to, because you said something earlier that I thought was really interesting with regards to Bitcoin's price. And you said, people look at Bitcoin's past performance and what they, missed out on versus the future and the future potential. Where we are currently in Bitcoin's, life and, overall development, I think is a very exciting time. But I do think that a lot of people are inhibited to, if they don't understand Bitcoin, I do think a lot of people are inhibited to invest in it because, they get scared by, oh yeah, but it's already gone up so much. And, what if it loses value? How do you, or not just how do you explain it, but how do you see Bitcoin's value going forward and the potential that it has in these 5 to 10 year cycles? Because, Bitcoin is something that is very volatile in the short term, but over the long term, I think, if you do look into these 5 to 10 year cycles, it's incredible. And so how do you see Bitcoin's potential where we are currently at within this cycle?
Yeah, so sort of like what we talked about before, like you have to do the work, you have to do the research, because what happens is after 10 hours and then 100 hours and 1,000 hours, you realize it at different levels. Mm-hmm. And the reason why it's important to do that is because understanding those levels starts to change the way you think about it. It changes your conviction level. And then it allows you to participate in the right size. So some people are like, well, I don't know. I've seen the track record and it's been the best performing asset over 15, 10, 5, 3, 2, 1 years. I should probably buy some. I'll put 5% of my portfolio into it or 10%. So they see that, sure, 5 or 10% is worth that, right? Where I'm at, I'm on the other side of that. So I'll start with that. You said investing into Bitcoin. I don't look at it that way. That doesn't make sense, because what happens is when you think about investing in Bitcoin, that means at what point will I sell to get back out of Bitcoin?
Yeah. Okay.
Right. I don't look at it that way. So let's use a thought experiment. So let's say that you're in Venezuela or you're in Argentina or you're in Turkey or Peru. All these countries are facing double, triple digit inflation. Zimbabwe in the 80s, they had to change their currency, I believe, 4 times. It went from like a 1-to-1 to the dollar to like a quadrillion to 1 in the dollar in like 5 years. Okay. Mm-hmm. So you're in Zimbabwe or you're in Turkey right now. Turkey, the Turkish lira has crashed 98% to the dollar in like 10 years. So you're in Turkey, you're dying. Every day you have to go buy stuff because tomorrow is too expensive, right? Like you desperately want to get out of the Turkish lira and move your money to the dollar. But you can't because your government's trying to restrict that with capital control laws, and they're restricting how much you can convert on any given day, right? But like, you do whatever the government allows you, but then you're trading more on the black market, even though you're paying a big premium, but it's worth it to you. So you got out, you got all your money into the dollar, and you preserved your purchasing power. Now those dollars buy you more in the future. Good job. Mm-hmm. At what point do you decide, well, let me sell all my dollars and go back to the Turkish lira? Never.
No.
You've left that system. I'm done. I'm in the dollar system now. That's the way that I look at it. The Bitcoin system is the new system. And I am selling my dollars to go into the Bitcoin system. At what point will I sell my investments and go back to the dollar? Never. Why? I've left that system. So I don't look at it that way. I look at it as savings.
Yeah.
I buy things. I have multiple houses in multiple countries, and I got cars and toys and whatnot. But what I save is in Bitcoin. That's my savings. And there's no point where I sell it for dollars ever again. It's not an investment for me. So I would just reframe that. But you can't get there until you've done the work to realize what is actually going on and how big this whole movement is. But what I would say to those people who think it's too expensive, and that was sort of the first question that you asked, is a couple things. Number one, when you think of it as investing, where most people think about it right now, coming in from an NGU perspective, they think about it investing. And so when you're investing, what markets are, the markets are forward-looking. Markets are what we call discounting mechanisms. Markets are a way for me to buy an asset cheaper today than I think it will be valued in the future. People buy Tesla, they buy Apple, they buy Google, they buy Facebook because they believe those companies will be worth more in the future than they are today. More specifically, they think they'll be worth more in the future than holding the dollars will be. And how do we value those? Well, we look at discounted cash flows. forward earnings, right? So Tesla is trading somewhere around like 150 times PE, price to earnings ratio. What that means is that at the current price and earnings of Tesla today, it will take 150 years to be worth what I'm paying today. Palantir is 500. Most of the Mag 7 is like 30 to 50.
Yeah.
Okay. So people buy based off of what they think the future value will be. But everybody talking about Bitcoin is saying what it used to be priced. No one's going, well, I can't buy Amazon or Google or Tesla because it used to be 5 cents. Nobody says that.
Yeah.
It's a crazy way to think about it. So I don't understand why all of a sudden most people are thinking about the future value of companies, but yet with Bitcoin, we always think about the past. Doesn't make any sense to me. But that's what happens. So people are thinking about the past. So what we want to do is think about the future. So the better question to ask is Bitcoin expensive or cheap? Our brains are comparing mechanisms. If I ask you, is this heavy? Heavy compared to what? We need something to relate it to, right? So is Bitcoin expensive or cheap? Compared to what? Well, it's expensive compared to where it was in the past, but is it expensive compared to where it will be in the future? That's how we should be looking at investments, right? So we want to understand, where is it going? And back to Solana, XRP, et cetera, and I kind of asked about bank software. I asked people about XRP. Tell me what the mechanism is. Why do you think XRP goes up in value? What will the potential future be? Where do you come up with those metrics? They can't, right? It's speculative. With Bitcoin, we have all kinds of data. We have 100 different data points that we can measure it against to figure out where it's going. As a matter of fact, I was just working on a YouTube video right now comparing it to the stable coins. So we can look at the total AUM, assets under management, of all stablecoins, and it has a ratio. So as stablecoins have grown from 0 to about 250 billion today, Bitcoin has also gone up on a multiple. So Scott Bessent, head of the U.S. Treasury, just said that he expects stablecoins to be $3.7 trillion by 2030. Okay, well, based off of the historical relationship of stablecoin to Bitcoin, where does that put it? We have all types of metrics we can use. We can think about it from a venture capital perspective. If I'm I am a venture capital investor. If I was going to invest into Uber, what is this Uber? Well, it's going to disrupt taxis. It's going to disrupt limos, vans. Okay, how big are those markets? The TAM, the total addressable market. What is the size? What percentage do I think we can acquire from those? 5%, 10%, and we come up with a valuation. That's what venture capitalists do, because I'm trying to guess a potential future. So Bitcoin is competing against store of value assets. As of today in 2025, that's about $1 quadrillion. Bonds, real estate, equities, currency, gold, collectibles, fine art, et cetera. It's about $1 quadrillion. By 2030, based off of the U.S. government's projected deficits and debt increase, that should be about $1.6 quadrillion. By 2040, that's $3.5 quadrillion. So what percentage of that basket do we think Bitcoin could get? 2%? 5%? 10%? Let me give you a hint. If it can get to 1.25% by 2030, that puts it at $1 million per Bitcoin. Now, is 1.25% of a market realistic over 20 years, 25 years? Well, Uber and Airbnb both got 10% of their market shares in less than 10. So could we get 1.25? Certainly, right? So there's a whole bunch of ways we can look at it through on-chain data. So for example, the pi top cycle indicator is like the most accurate indicator that we've had. It's nailed every single top for the last several cycles. And it's projecting, these are moving indicators. So people trying to guess this on the short term, you won't ever know because these things are moving based off of volume and whatnot. But many indicators are showing Bitcoin could hit 250 just this cycle alone. So then the question I would ask is Bitcoin too expensive? Too expensive compared to what? If I could buy $1 million asset for $100,000 today, is that cheap or is that expensive? So to me, it's cheap.
Yeah, very good explanation, and I appreciate that. My last question for you, because I know we're running short on time here. It's a question I ask at the end of every episode because, we do have more and more people coming into the space, which is a good thing. But I think it's important that they have the right words of wisdom and advice when they first enter the space. So what words of wisdom would you have for anybody who is entering the space today?
The words of wisdom I would give to anybody entering the space right now would be, number one, do your research. Because you cannot borrow somebody's conviction. You have to develop your own. And you only develop your own through doing the research. And the more research you go through, the more you'll realize there is to learn. And each step of the way will build your own conviction. And the problem is, without having your own research and your own conviction, you won't allocate properly in the greatest opportunity that we've seen in over 500 years. Not just your lifetime, multiple lifetimes. And so this is happening, and you can either let it go by or participate a little bit, or you can participate in the right amount, but that only depends on your own research. So I'd say, number one, do your own research, build your own confidence. Number two, what I'd say, which maybe also combines with number one, but number two, I'd say, is to zoom out. Because what happens is most people think that every piece of news that drops is a tradable event. Someone messaged yesterday and they said, but because I've been talking a lot about the Bitcoin treasury companies, which I think is the most innovative thing in the world right now. It's the biggest, talk about TAM, total addressable market. It's focusing on the biggest addressable market there is for Bitcoin. And someone said, but explain to me why Bitcoin went up and MicroStrategy is down for the last 10 days. I'm like, the last 10 days, you'll never make it if you're watching your portfolio on a weekly or monthly basis. You're just never going to make it. You need to be looking out over years. And so I would say zoom out and do your own research.
Amazing. Great advice, Mark. And where can my listeners find you, find more about what it is that you're doing, and all the great companies you work at as well, or work for?
Yeah, so a couple things. Number one, I mean, I'm not hard to find. Just Google Mark Moss. I make a couple videos. I make a couple videos per week on YouTube. Mark Moss on YouTube. Number one. Number two, I'm pretty active on Twitter at @1MarkMoss. And then, as I said, I think the Bitcoin treasury companies are the most exciting thing happening in the Bitcoin space, because it's going to address the biggest addressable market. 97% of institutions cannot buy Bitcoin. They just can't.
No.
And I do think that for each of us, we should buy Bitcoin and put it into cold storage. But for 97% of institutional money, they cannot. And they're holding assets that are losing money to inflation, as we framed it up. And what Saylor's doing by creating these products is giving them a way to get access to Bitcoin trapped in the system that they're in. I have taken the role of a chief Bitcoin architect with a brand new company in the UK doing this called Satsuma. Ticker is SATS.L. We are just announcing our raise today. So at the time of this airing, we'll be past that. And we are the largest raise in the UK with the biggest institutional investors. And we're going to dominate that market. And we are going to bring Bitcoin to the institutional money that is trapped behind these regulatory walls and rescue them. So those are the things I'd say to watch out for.
Yeah. Well, congratulations on the raise, and looking forward to watching those developments in the space. Mark, appreciate the time very much. I got a lot out of this interview, and I'm sure my listeners will as well.
Thanks, Stephen.